Good morning, everyone. It's December 16th, Friday morning, around 7:30 a.m. Eastern Time. Just want to run through the morning charts and kind of recap what unfolded yesterday and kind of what to look forward to today. Now, we've got the 4-hour US dollar chart with the blue line overlaid, which is the SP 500 futures. And what I want to just show is here, we're still in a strong uptrend with the US dollar. And what we had a couple days ago, we saw the US dollar break above this 80 level and surge to new highs, and of course the market started to break down and go into our favor. And this is when I started getting a ton of emails, and I pointed out in the morning saying, we're at a pretty major level here. This 80 level on the US dollar has to hold for the week. And I said, it could easily still reverse down and close out, and we could see the stock market actually reverse and put in a bottom, which is why I've been keeping my eyes open and lowering our protective stops on our short, simply because I'm not anticipating the market to bottom, but it's very possible that the market could try and put a bottom in here. And this is exactly the reason why I sent that email out, trying to tell everybody to not chase the trade. If you're not in it, avoid it. You don't, after you get a nice downdraft in the stock market, and we're trading down here, this is when everybody seemed to be emailing me saying, I want to add to my short, or I added to my short, or I'm going kind of crazy. And the US dollar was at a new high at a major pivot level, and the stock market had a big move to the downside. And I've been telling you that we've been moving our stops down to protect our money. And after a strong move down, people are still wanting to short down here, which just doesn't make any sense. It's just pure greed. You're trading off pure emotions, and it's very, very dangerous to just want to chase something just because it's moving nicely. Usually, if it's moving nicely, the move is pretty much over. So you got to keep that in mind. Now, if I just clear the chart here, you can see the US dollar has been pulling back. I pointed this out earlier this week that I wouldn't be surprised if we get a pullback to the 80 to test it. And overall, the chart is still looking really bullish. We've had a nice move to the upside, and now we're just getting it's a very controlled pullback, which is good. Usually a controlled pullback, you'll see a shakeout at the end, which means you'll usually see a sharp drop, which will shake everybody out of this bull flag and get out of the position. Something very similar to what we saw back here. We had a nice move to the upside right here, and then we had a nice controlled pullback, and then we saw the bottom just drop out, shook the market out, and then from there on in we saw the US dollar have a nice strong rally. And that's what I have a feeling is slowly unfolding here. We're coming back down to this 80 level, and it just started to pick up speed here on the downside, and it could pull back all the way to the 90-50 area. The question is, will it recoup this 80 level by the end of the day and work its way up? But overall, the US dollar is still in an uptrend. Just looking at the futures chart down here of the SP 500, you can see it's put in a nice bounce. We are coming up to a key resistance level, which is a previous pivot high. There's also a previous pivot low here. So we do have resistance, and if it breaks above this level, we actually have our stop set just above it. That we could get shaken out of our trade today, or not shaken, but we could get taken out of our trade today, and we'll kind of go from there. But we're going to keep our eyes on it. The US dollar, to me, looks like it's ready to have a nice move to the upside again. It's just the question is what our equity is going to do at this time, and are we going to get taken out of our position? So let's jump to the commodities chart. Of course, a falling dollar means rising commodities, so we're seeing upward move in metals and crude oil today. Here is the 4-hour chart of crude oil, and you can see this the past 12 hours or so, we've pretty much seen crude oil just kind of float back up. Yesterday it was under quite a bit of pressure. It continued to make a new low while the overall markets traded sideways. We're seeing a little bit of a bounce today, still under a key resistance level. Of course, this is a short-term chart, but if you just go through the middle of a previous consolidation, that is where resistance is going to be. So it could hit its head, come down, form some type of little bull flag, and then from there it could break out to the upside, this would be the next key resistance level. And of course, this would form a mini inverse head and shoulders pattern, and you'd have a neckline. So there's all kinds of things that can unfold. Simple analysis, but right now I'm still waiting to see if that US dollar is going to bounce this morning, which we need it to, or else we're going to get taken out of our short and we'll be locking in our profits. But overall, this is if the US dollar starts to sell down, we could see crude oil go back up to the 97, 98 area. Looking at gold and silver, here is the gold 4-hour chart, and you can see it's been kind of just bouncing bottom there the past couple trading sessions. Selling volume obviously is in control. Just looking at the volume overall, you can see we've had relatively strong volume as gold moved down, and then we just saw more or less it drift up on almost no volume, and then selling volume started to ramp in, and then it continued strong as gold continued down. So this morning we're seeing a very light volume move up, and we'll just have to see how this plays out. It comes down to what I pointed out a couple days ago, the US dollar hitting this 80 level. If the 80 level is going to be broken and held above on the US dollar index, or if it's going to reverse, and if the US dollar tanks, then we're going to see metals come back up. So it's kind of a major pivot point, and the reason why I don't want to add or do anything to any positions right now. Just sit with where we are. We're in a good position, and you don't need to alter it when the market moves to an extreme. You just manage your position and kind of play it one step at a time. Looking at silver, silver's doing the same thing, and obviously silver's a little more volatile than gold, so it's had more of a percentage move back up, but you can see it started to shake out here, and we're getting a fade up here. There's potential for it to drift all the way back up to the 31, and overall you still go to the weekly chart. There's still potential for these markets to sell off pretty sharp. Either way, gold and silver have had a substantial move to the downside. They're going to still have to try and form more of a base, and then once they form a base, they could start to another rally. But overall, there's still going to be some time. This is a weekly chart, so if you think every 4 candles is a month, we got a lot of price action to go before it really starts to break up, and if it ever wanted to start another move up. But overall, the trend is down right now, and sellers are in control for gold and silver. Looking at the SP 500, this is the ETF with the panic kind of selling indicator on the bottom. And what I just want to point out here is we've had a very controlled pullback. Started to get a little choppier. We got a gap down. Gap got filled yesterday. Overall, we haven't seen any of these panic selling spikes. You usually see panic start to pick up, and then once they reach a certain level, it usually puts a bottom in the market. And you can see we had a big spike back here also. So we have yet to really see a big move to the downside. We haven't fully filled this big gap from a while ago. Overall, this pattern looks as though we're still moving down. We've almost got like a little mini bear flag kind of forming here. The market wants to open up a little bit higher this morning, just below our protective stop, so we're very close to being shaken out. But overall, it's a mini bear flag, and there could be one swift downdraft that will cause a spike in panic selling and fill these gaps, and then from there we could see a nice Xmas rally back up to these previous highs, or possibly even higher. So that's kind of where we stand there. Looking at the intraday chart of the SP 500, you can see we saw the market come up, had a big pop and drop, which is we ended up shorting down in I'll just mark it here. We ended up taking a short position right over here, and more or less then the top took a while to play out, and then finally we saw the shift to the downside actually really come into play. And you get these light volume bounces, strong sell-offs, light volume bounces. The past couple trading sessions we've seen the market not really bounce. It's just kind of held lower. It hasn't had the energy to move up. Now that so many people are starting to see that the market is heading down, the bounces are, there's so many sellers out there, the bounces stop more or less. So at any time we could get that everybody sees the downtrend now, and we see one big final swoop down. We see panic selling hit the market as everybody bails out when we break these lows, and we'll fill the gap. So that's kind of where we stand. We're at a tipping point here. where the market could very easily have a strong rally to the upside, or it'll have a very strong move to the downside. And we got in with our position when risk was relatively low. We've taken some money off the table. We've got our pivot lows set somewhere right in our protective stops set somewhere in over here. So if we do get a knee-jerk reaction to the upside, we'll be taken out with a nice little gain. If it continues to break down, we'll be tightening our stops and trailing it down very tightly, especially if we see panic selling step into the market. We want to choke our trade out as it continues to go into free fall mode, simply because it's usually the end of a downward draft. So taking a look at the futures chart this morning, this is the futures chart of the S&P 500. This is a 10-minute chart. And you can see we've got the past two trading sessions, and overall the market closed right here yesterday. We had more or less a nice downdraft in the morning, very strong selling volume, and then it more or less just traded sideways to lower into the close. Overnight trading, we've seen a continued drift up, and we've got our pivot, our protective stop set somewhere just up here. So we're getting a little close. Of course, here's the previous pivot high. This happened during overnight trading, so I went with a price set further back in time here. Let me just pull back a little bit more. I went for putting in our protective stop. I usually don't like to use overnight trading because there's just no volume. These highs and lows, they aren't very significant. They do count for stuff, but they're not a real pivot high. It's not when the majority of the volume is traded. So I don't go with just putting a protective stop, at this high here. I actually go with the last key pivot, because this is a significant drop. To me, this was a wave down, but still this wave here I see get pierced more than anything else. So I ended up taking a protective stop just above this intraday high volume pivot. So it actually puts us a little bit higher. And this is what happens in futures. If you've got a pre-market high or low, you'll usually see during intraday trading that level get pierced by a couple ticks, and then you'll see the market drop right off. And it's very similar to what we saw back over here on the 13th. You see a move up, and then in pre-market you just see a blip up just as the market opens, shakes everybody out, and then you start to see a big move down. So that's kind of where we stand today, and we've got our line drawn in the sand that I'm not willing to move it or budge it. If we get taken out, we get taken out. Either way, it's a profitable trade. Hopefully the market will reverse before it gets there. If not, that's just trading, and we just continue to look for a new setup. Anyways, that's it for this morning, and I will talk to you in a bit. Bye-bye.